Alright, so I want to break down this trade that I took on my eval. I want to be upfront about that. This is for my Lucid eval. I made just over like 1100 bucks. So I wanted to break it down, and for the Lucid eval you need to make $3,000. So I wanted to break down this trade, and you can see right here I'm logged into my Trade of 8 account, so I was able to connect that to my trading view. This was such a beautiful trade on the 1 minute time frame using ICC. Oh, it hurts because look, if we zoom out to the 1 hour, bruh, bruh. Look at how I literally just caught a small, tiny little piece of the freaking pie. This is my 1 to 3 right here. It ended up being a 1 to 3, but look at that. Oh my gosh. I had a runner. But it was like almost 2 a.m. when I took this trade, so I decided to close everything and go to bed. And I woke up and price was like all the way down here at like 7 a.m. I was like, bruh. So let me show you how I was able to catch this tiny little piece of the pie, and how we could have left some runners, at least one. I had one. Damn, look at that beautiful 1 to 22. You know what? I'm gonna just be grateful for the little piece of the pie that I got towards my eval, and I'm gonna leave it at that. So let's clear the charts and start and break everything down. So here we are on the 4 hour time frame. We know that overall, like, the big picture was we had all-time highs up here, and then we made this big drop down. And so I don't know why I didn't hold for at least this point right here, because you can clearly see that we hit that and now we're making a new indication down below this level. So let me just show you what I see. And I don't know, oh my bad, why I didn't hold. We were like right here, this was the trade, and then we could have held all the way for down to here and it would have hit this morning. Let me not FOMO. But yeah, like, even using our 4 point method that I was talking about in my other video of how I mark up my charts, you could have used either point, like this point or this point, and you could have seen that just anything below this level was just clearly gonna sell. I think I had this point marked up earlier when I was looking at it, and I know that below this level there's sellers. So this is where we were, and clearly we were way under this point where sellers were, so I don't know, guys. I just don't know why I didn't hold my runner. Even where we were, like, most recently, this is the area that I had marked up in the video. Right here was our lowest point, highest point, and then we slide that across. We can clearly see that this consolidation that we had for those few days, we broke below it, and we had this level of support right here for the indication right here. This is what I would consider the indication, because we found support right here. We were just bouncing on that support for a few days from Monday to Wednesday. That's when we got the break right here. So this happened at 4 a.m. So that's why I woke up the next day and I saw price right here, but in this area. This is how I had my chart marked up, right here, like, even like without even marking our chart and just using that 4 point method, we can see that we were below these level of sellers, right? So we had consolidation, we tried to break above, couldn't break it, couldn't hold, I mean, and then we broke below the level of sellers, and then another major level of sellers right here, which is what happened overall, and why we were trying to make the move up to all-time highs in the first place. Alright, so that's what I was seeing overall. Just quickly using that 4 point method, seeing that we were below a level of sellers, and I don't do this every day. Like, I don't zoom out to the 4 hour time frame every single day to know, oh well, I'm below this level, or I'm gonna mark up my 4 right here or 4 right there. I don't do that every day. I've been on the charts every day, so I'm watching it. I've been here since January, and then I go in February, so like I already know this is going on in the background, but I'm showing for like video's sake where my mindset was, what I was seeing, even though it wasn't marked up at the time, what my mind was still seeing, because I've been monitoring the chart and because I've been having alerts at these levels and just tracking price as it's being built. So I don't do this every day, but I just wanted to show you guys what I was seeing overall and what the trend was, how I found my bias so that I was able to find a sell versus trying to look for a buy. So now we can delete this and we can delete this. So in reality, I was focused in on this area right here. So I can delete all of these candles. Alright, so I was basically in this area right here. So right here, this is what I had marked out, right? So I had this area marked out. I knew that this was my underneath my level of sellers, and then above was my level of buyers. And if we broke above, we were trying to reach this high and break higher. And if we broke below, we were trying to reach this point and continue down lower, right? So that's where I was. That's how my chart was marked up. I didn't have this marked up. I didn't have this marked up. All I had was this marked up because that was what was relevant to me. So even though you have all that for, or let me see, even if you wanted to mark up your charts like this, I mean, you could leave it like that. And those are going to be your key levels that you're waiting for, because see, this is on Tuesday, and then another Thursday, another Friday, a whole week went by, there's Tuesday again, and then another week went by, and there's Tuesday again, right? So this is your key levels where you're going to be watching price react strongly. The key levels are going to tell you what the trend wants to do, and then as we zoom in lower time frames down to the 1 minute time frame, those levels are now just going to give us more so of an entry rather than telling us what the trend is doing. So the trend is defined by our key levels on our 4 hour, and the indication is going to be on the 4 hour, it's going to be on the 1 hour. Indications only can happen on the higher time frame, and we'll get into that. So this is what your chart would have looked like if you had all of them marked up with that 4, but because price was here, I only cared about this key level. These weren't really relevant to me, and because I don't want a lot on my chart confusing me, this is all I had marked up. So now that we see that we have this level of support and price has been here for about 2 weeks now, we know that this, once it breaks, is going to be an indication telling me I'm not going to get into this right now, but I know that price is more likely to be bearish than it is to be bullish because we didn't break this level where we're trying to be buyers to this point. We broke this level where we're trying to be sellers down to whatever point the indication makes, right? We don't know yet. That's why you don't trade the indication. So we had a break below this level of support that price was in for about 2 weeks. So there's Tuesday again, and then we had a break right here, finally. So that doesn't immediately tell me, oh, I want to get into sales, I want to get into sales. That tells me, like we just said, about the probability it's higher to go down. Now that it broke on our 4 hour, we can zoom down to the 1 hour time frame and see what price was doing. So we can see again, this was the level that we had marked out, this was the level that we had marked out, but we deleted them because we didn't need them at the time. We were right here, so we care about this key level. So now we're on the 1 hour time frame, and once you mark out your 4 hour time frame, you don't really need to be on that time frame anymore. You can just monitor your trade on the 1 hour once you mark up, because you want, as a day trader and as a scalper, you are going to be mostly on the 4 hour. You're going to be mostly on the 1 hour time frame monitoring your trade to see the structure, but the 4 hour is going to be your key levels to see, okay, where is my 1 hour heading, and is it gonna give me the indication that it's gonna be bullish or bearish based off the 4 hour break, based off the 4 hour key levels, right? So now that we're on the 1 hour time frame, this is what I would have been just watching. I would have had my alert right here. Let me add an alert to show you where I had it. Oh, I guess when you're bar replaying, you can't add an alert. So anyway, I would have had an alert below this area, but I would have already seen, based off the consolidation, we were making continuous lower lows and lower highs mostly what I care about are the lower highs, right? Because it can give you equal lows and it can give you equal highs, but as long as it continues to break down lower and it respects these highs right here and it doesn't go higher, then we can see that price wants to continue down bearish. So that's why in a bearish trend, you're going to track your highs. So delete that. You know that that's where price breaks out from, but you know that this is the level that you have to respect in order to continue a downtrend. So right here, we also track our highs, and then we start to consolidate again once we're down below this area. And then now, once we're just moving sideways is when we can track our lows. So now we want price to break either this low right here or this high right here because it's consolidation. That is going to tell us if it breaks above this level of consolidation that it is going to go potentially higher. If it breaks this level of support, that's going to tell us it's going to go potentially lower. So these are the two moves that we're waiting for, not necessarily saying we're going to take buys from here up to here, which we could, but who knows if price is just going to continue to ping pong, and your safest bet would be to just wait for price to be outside of this area because you already have an indication right here that price above this level has buyers. So this is just a range, and if you're buying up here, you could get caught in that range again. So that's why the safe entries for buys are up here. But right here, now that we broke below this 4-hour level, so let me actually color code it because I did color code it as I was doing this. My red is my 4-hour level, and then I could even have it marked up right here. This was my 4-hour level of consolidation. This was my 4-hour level of consolidation. So let's change that color to red also. And then all of the blues were my 1-hour. So this is all 1-hour. And then this is the last level that was respected before price started to chop around, right? So right here, 1-hour. And then again right here, 1-hour level. Okay, so I'm waiting for this to break out and I would be comfortable taking a sell. Why? Because of this 4-hour break. This 1-hour level right here, let's make it blue again. A 4-hour level is going to tell you the structure. Remember, the structure comes from the 4-hour. The 1-hour builds the 4-hour structure, but it doesn't tell you the exact structure. It just helps build it, and the 4-hour is stronger than the 1-hour, so this is going to be the structure that you're going to follow. If you're, if you're a swing trader, you're going to follow the structure off the daily, but we're not going to get into all of that. But this is the structure that you're going to follow regardless of you being on the 1 minute. I'm going to show you my 1 minute entry, but I am still focusing on the 4-hour and the 1-hour because those are my key levels to tell me which trend is potentially stronger, a buy or a sell. And as you're scalping on the 1 minute, you want to be more sure of that because the 1 minute can fake you out a lot. But if you're with the higher time frame trend, then you're just getting in on those continuations. You have less of a probability of price faking you out on the 1 minute if you're following the 4-hour trend. So this is why we focus on the 4-hour structure. We see how it's being built on the 1-hour time frame, and then from the 1-hour time frame we get another break, right? So we want another indication, so we just continue to do the same thing. We wait for a break and then we zoom in. So the 4-hour gave us a break, now we're zooming in. So the 1-hour needs to give us a break either here or here in order for us to zoom in, because right now this is chop, this is not breaking nothing. So if we enter right here, even though we want to go and look for a trade right now because it's been since Sunday open and then it's already Tuesday, you haven't traded because it's chop and none of these levels have been broken, then I can see how we can feel a little bit desperate to get into something, or feeling like we're missing out on trades, or feeling like we just have to be into something because this is how we make our money, this is how we make our living. But when price is chopping, Just be patient and you will get paid out for your patience. I promise you. Like this, I traded in this and my account went a little in the negative. So this trade, it didn't get me super into profits, but it did get me super out of the negative. But it was because I was trading chop. Don't do that. Wait for your trend. A trend is your friend. Look at how if you would have bought up here or down here, you could have rode that all the way down. Just don't trade chop. Let's make that big. Don't trade chop. Don't don't trade chop. Just please. I know that you want to be in a trade. I know that sometimes we have a few days left on our eval, or we have a bill that needs to be paid, or we have something happening that you need to feel like you need to trade. If it's chopping, don't trade it. Don't trade it. Don't trade it. You can only identify chop on the 1 hour and the 4 hour time frame. Yes, you can see it on the 15 minute and the lower time frames, but still, even a lot of people will say, okay, well, we have a low, a high to low, I'm gonna buy. And then they're gonna think I'm gonna go all the way up. You could target these highs, and yes, it could hit. That's scalping. That's more of support and resistance trading, not what I do. But you have less of a probability because look, what if you would have entered right here and you would have put your stop loss somewhere down here? You would think it's going up, and then all of this tiny wick comes and wicks you out, and you just don't know. It would have hit your TP anyway, but you just don't know, right? Because if you would have gone into the 5 minute time frame, you would have put your stop loss probably right there because that's the most recent one, and then you're trying to go for these highs, and then it starts to chop, and then it wicks you out, and then it goes to your TP. So trading chop is just not safe. Just don't do it. Don't do it. You can identify it a lot easier on the higher time frames, and it's just going to be moving. And just don't do it. Just don't do it. Just don't do it. We're waiting for a 1 hour break so we can zoom in. So that's all we're doing, right? So let's wait for a 1 hour break. We already know that our bias, perfect. There's our 1 hour break. So let's go even like this. Let's zoom into that, right? So finally we have a break. What does this break mean though? This break just means that there's an indication that price wants to potentially go lower. It doesn't mean you're jumping into sales. It doesn't mean you're, price is melting and melting and it's going to go all the way down to the bottom. What is the bottom? That is what you have to ask yourself. If you are in a trade and you don't know where the bottom is, you're trading the indication. That is not what you want to be in. You want to have a target in mind. So all of this is going to be now just our indication. We want to see this happen, right? Our correction. So we want to wait for the second time around, and we want to be in on the continuation so that we can ride the trend down instead of riding the trend to a certain point and then it goes up and then we think that it's going to sell, and we just want to ride the trend down. So this indication, if you just jump in right now, it still has the potential to correct and then go higher. Why? Because it never gave you confirmation that it wanted to continue lower. So that's why you want to see the correction. And the correction just means it gives you another lower high. So right here we can see we were clearly making lower highs the entire time, but it wasn't until we had this indication that price broke the support that we are for sure, we know price wants to sell below this level. So now we wait for a lower high to be built. So it's still indicating, and a lot of I felt FOMO. A lot of people will feel FOMO seeing this, being like, damn, I knew that price was going to sell because it was creating those lower lows. But you didn't know that it was going to break this level of support because it was still chopping around. Yes, you could have taken that risk and gotten in on this indication, but where's your target? What are you going to target? There's no target for you. You're just now hoping price continues to melt, and that's when you start to be unsure and less confident about your trades. When you have a low that you can aim for or a target that you can aim for, you can feel more confident in your trades rather than just getting in and like skydiving and just hoping, where's your parachute at? You don't have a parachute right now. You're free falling. So your parachute is the correction and coming back down and having the target in mind. So you already know what's going to happen, right? So this, as much as you want to FOMO, as much as I want to FOMO, as much as I do FOMO, this is not something that you trade and you hold. You can scalp this, which is something that we did, and now something that I'll show you to do. You can scalp this. Remember how I said don't trade the indication. Guys, I need you to understand that we are not Sci. We are not swing traders. He is a swing trader. He trades the 4 hour, the 1 hour, and this is as far as he goes. He sees this indication. He probably sees the correction, waits for that correction, has another right here, so it goes back up or something. I don't know. I'm not Sci. That's what I'm saying. He doesn't trade the indication the way that we would. We can scalp the indication and grab a piece of the pie, just how my trade was, that I'll show you. But if you're going to follow everything that Sci does, you're going to wait weeks or days for your setup. Just like him, you're a swing trader, you're willing to wait days and days and days for your setup, then don't trade this and hold it. Just get in, grab a piece, get out. That's what I did. That's why I'm able to tell you how I did it, because I was able to catch a piece of the indication, I'm able to catch a piece of the correction, and I'm able to hold for the continuation, which I didn't do, which I should have. If I would have known I was in continuation, I could have held. But because I'm mostly now trying to scalp again, then I know if I have a break right here, what did we say? If we have a break, we zoom in. So now let's go down to the 15-minute, right? Let's try to scalp something, right? So let's try to scalp a piece of this indication as a scalper. Remember, we're taking a swing trading strategy and taking the concepts of it and using it on the lower time frame. We're not coming up with a new strategy. We're not doing anything magical or predicting anything. We're taking Sci's swing trading strategy and we're using it on the small time frame. That's it. But we don't do it without disrespecting the 4 hour and the 1 hour. We use his 4 hour and 1 hour in order to unlock the 5 minute and the 1 minute. And that is the only way you can use the strategy. If you start from the 4 hour and work your way down to the 1 minute, because any other way, you are going to get faked out. You come into price right now, you zoom into the 1 hour right now, and you disregard everything that's happening, and you're just looking at this, and you don't zoom out to the 4 hour and see what price is doing overall, why you're selling, you're gonna get faked out. Because you're gonna see this, and then you're gonna see on the 5 minute it's gonna go up and it's gonna build uptrend, and then you're gonna think it's going up. You don't know that it's the correction because overall you are on the, anyway, I'm not gonna say too much about that. It's just that's another rant for another day. Let's just continue to get into this, right? So I didn't trade this, right? So I was probably asleep at this time. Yeah, this was 7 a.m. And this is when I saw price, right? So now I'm coming into the market around this time. And then this is where I was, right? So I didn't trade this either. Okay, so I remember this day. This was New York session. I did not trade New York session. I remember I took my trade right before bed, like at 2 a.m., so that must have been like London end of Asia session. So right here, this was all of New York session, right? So I can I can see that right here, this is what I had marked down, right? So I had my break. I wanted price to come all the way up to here and correct to give me more of a target to go for, because a small correction gives you a small target down to the indication level. So I wanted to see a bigger correction up to here, because that is the level that it broke out from. So I wanted it to retest to see if it really wanted to reject and sell off again, so that I could aim for here, or if it was gonna actually continue higher and go for this level here. So this is what I wanted to see overall. And so I think I did my 4 method like this, and then I had this low marked out. This was my lowest point, and this was my highest point. Below this level we have sellers, and above it we have buyers, right? That's the only reason why I did that. Oh shit. So now we can delete this, and now we can zoom in to our time frame. Why? Because we had a break right here. So remember, we have a break, zoom in. So on the 1 hour we had another break, zooming in now, going to the 15-minute time frame. This is when you can start adjusting your levels, or however you want it to look better. I think I did have mine looking more so like this, because I included this wick, and then this candle came and rejected it. And so I had this level marked out kind of more like this. And then I did have this level because that was the highest point. So I know that if price breaks above here, then I was going to see more of that correction, because I know bullish structure in a downtrend is a correction. So I know that I can scalp these as a scalper all the way up to these potential levels, but that is low probability, because now I'm going against the trend. So that's why I had an alert here, in case if I saw a good setup, I could scalp it, maybe up to these levels, or for a quick 1-to-1, 1-to-2. But nothing happened above these levels, so I was not able to scalp above this. I would only scalp if it was a good trade and not just like 2 candles making its way up, or if it's like super wicky, but whatever. That's what I was looking for above this level for a quick potential scalp. Doesn't mean that I am going to scalp it, but it's a potential scalp up to these levels where price broke out from. So now we can start to see price breaking this level again right here. Right, so this is why we zoomed in, because price broke below these levels. So if we zoom into that price action, we know that below this level we have sellers down to this level. So I flip-flop around from the 15 to the 5 a lot. The way I am able to pick which one is better for me is the wicks. And if I'm seeing too many wicks, I'm going to zoom into a smaller time frame, because wicks are information. They are built off of smaller time frame structure. So if I'm seeing too many wicks on like the 15 or the 1 hour, I'm going to zoom in to get a better picture. And right here, I didn't like this wick and I didn't like this wick, so I zoomed in to the 5-minute to see more of that structure, and I can see better. Okay, so price went up to here, rejected, went again and rejected. So now I can see more of like equal highs versus a high and a wick on the 15-minute. So I have a better picture and a better understanding of how the structure is being formed, because I now have more candles to work with. And this is how you can be less and less intimidated by the lower time frames and treating them exactly like you would the higher time frame. So I was intimidated by the 1 minute when I first started scalping. I thought it was moving too fast. It could fake you out a lot. There's no true or real trend on the 1 minute, but all we're doing is zooming in the 15-minute structure, 5-minute structure, and we're ending up on the 1 minute to see how that is being formed. And we're treating it like it's a higher time frame, and we can clearly get better understanding of the highs, the lows, and just we're able to scalp that way. So treating the lower time frame as the higher time frame, once you've already done your higher time frame analysis, will make the lower time frame less intimidating. Right, so here I am on the 5-minute time frame. This is what I was waiting for the scalp. Remember, I had an alert up here, and as we have these levels, remember this is a blue color, so this is still our 1 hour. So these are still, as a scalper, key levels. Now we're not focused on the 4 hour, we're focused on the 1 hour because we already broke that 4 hour. This is what I would have seen during New York session. This is how I had my chart marked up for New York. This is 1:30 on Wednesday, and I didn't catch anything here because, again, we had a big drop that happened overnight. I did not catch that. And so for New York, we were just chopping. I personally am staying away from chop, so I had an alert down here to scalp down, and then I had an alert up here to scalp up. None of my alerts were hit until down here. I could have caught something down here, but it never came back to my 5-minute level that I was looking at right there. So price broke out from there and it never came back up. This is still an indication, even though we're on the lower time frame now, the 5-minute, we still don't trade indication, right? We wait for our correction and then we wait for our continuation. That's what saves us from trading chop. That's what saves us from being faked out. We especially want to wait for the correction because we're on the lower time frame, because that is going to avoid a fake out. The 1 hour is going to fake you out less than the 5-minute because it takes so much longer for that 1 hour to be built. The 5-minute is going to fake you out left and right if you don't know what you're doing. The 1 minute is going to be a living hell for you if you have no idea what the higher time frame is doing, and if you can't understand simple market structure the way that it's built. Because if you can't understand it on the 4 hour and the 1 hour, there's no way that you're going to understand it on the 1 minute. If you understand it on the 4 hour, there's no way you shouldn't be able to understand it on the 1 minute. Treat it the exact same way and you'll be able to clearly see your levels, your indications, your targets, when price breaks, everything. You'll be able to see it all if you treat the lower time frame like the higher time frame once you understand all that. So I didn't trade any of this. So let's go down back to the 1 hour time frame, because then if we zoom out, we can see that because we had a 5-minute indication, right? We had an indication right there. We could have been like, oh, I want to sell, I want to sell. But again, where's your target? You could have entered late and gone in here, and then you're trying to target what? You don't even know what you're targeting. All you know is your stop loss has to be above here because that's the previous swing high. Or, maybe you are being conservative and you put your stop loss lower and you got wicked out. So you just don't trade indication no matter what time frame you're on. Just don't do it. Don't do it. Wait for the second time around, because if you zoom out, you're still on the indication on the 1 hour time frame. So we broke out of here and this is still indication. So even though we were looking for a scalping opportunity, we didn't get it. So we just continue to be patient. Even though we know we can scalp this way down, we still didn't get our opportunity because the correction never presented itself. We only had that break of structure, and so we just continue to wait, right? So we had an indication. Now I can delete this. I was waiting for the correction. So hopefully Asia's session gave me the correction so that I can ride the continuation down to wherever the indication was. That's my target. That's why you wait for the second time around, because now I have a target that I can aim for. Okay, so I waited, and I think I was around here. Yeah, 8 p.m. is when I started to see, okay, price is getting closer and closer to my area of interest, right? So my indication happened there. So now that I see that price is making higher highs and higher lows on the 15-minute, that's how I was able to see, okay, when is this correction going to be over so I can continue and get in and aim for this low right here. So I guess I skipped that part, but once I was down on the 1 hour, right? We have that indication. We tried to go down to the 5-minute to look for a scalp. We didn't get it. So what was next to what we do now is we just monitor it on the 15-minute time frame. So we wait for this indication to be over. When do we know the indication is going to be over? Well, if it's a bearish indication, it's going to stop making bearish structure. It's going to stop making lower lows and lower highs, right? So low, high, lower low, lower high, lower low, lower high. It's going to stop doing that, and it's going to start building bullish structure. So higher low, because this low is higher than this. Higher high, because this high is higher than this. Another higher low, another higher high, another higher low, and it continues. When do I know that correction is going to be over? Notice we're only on the 15-minute time frame right now. When do we know this correction is going to be over? The same exact logic applies. It's going to stop building bullish structure, and it's going to start building bearish structure. So, what happened after we created this higher low? A lower high. Now, that is not telling me the indication is immediately over. That's telling me that is interesting. So let me zoom in just a little bit so you can see. That is giving me a clue that the correction might be over. So the entire time, what we're doing is, remember, for the low, for the downtrend, we're tracking our highs. This high right here, respected. This high right here, respected. This high right here, disrespected. So if we were trying to scalp the correction up, we could have, because we now have a break of this structure. And that's a clue that the correction is going to be starting, and the correction is going to be the opposite of what the trend is, the indication. It's going to be the opposite of the indication. If the indication goes down, correction is going to go up. So that's what I was waiting for. I was waiting for this uptrend to stop building higher highs and higher lows and show me lower lows and lower highs. So once this 15-minute structure stopped building these higher highs, and see how, notice this candle couldn't even break this candle and it closed, this is still higher. So this is still considered a lower high, right? Once we started building that and I got this confirmation of this red candle, I then zoom into my 5-minute and I start to see, why did price make this lower high? What is going on at this level? So let's delete this, delete this, delete this, just to have more of a clear chart, right? So remember, this was the high that we had on the 15-minute level that was disrespected. We could have gotten in onto some buys right here because we had an indication above this level we buy, so we could have taken buys above this level, but it would have been risky because, again, you're against the trend. Even though you're scalping, you want to be with the trend. This is going to be a little trickier to scalp, but you can do it. It's just going to be riskier, so do that at your own risk. But yeah, let's delete that level because we weren't focused on buys. We were focused on sells. Okay, so remember, this was that indication. Again, we have all blue boxes. These are all our 1-hour levels. Again, we broke out of the 1-hour level. We went back to this 1-hour level. We even broke out of this 1-hour level, and we went all the way up to this blue level. So this right here, I know that there's sellers below this level. So I know that from here, once price starts to get lower and lower, once price starts to build bearish structure, I can potentially take it down to this level right here. But my real target now is this lowest point, because this is 1 hour, right? If we go to the 1 hour, this is the lowest point that was created, and I know that it looks like wicks right now, but remember what we said. Wicks are information. They are made from lower time frame candles. They are created by that. So that's why on the 5-minute we can see that if we mark it down right there, we have the 1-hour low. We are just able to place it properly because the structure is there for us instead of just a wick. Okay, so this is why this is still considered a 1 hour level, and we can type out again. This is another 1 hour level, and this is our other 1 hour level that we were looking to break if we were going to scalp some buys, but it never broke. So right here, the same logic applies for this, right? If it breaks above, we're going to try to look for some buys. We're going to try to scalp some buys. But what happened? We broke above, and then now is when I start to mark up again. And these are now my markups for my entry. This is exactly how I had my chart marked up when I found the entry on the 1 minute time frame. I had this highest point, and you know what? Let me show you guys how I also used the 4 for 4 method. This was my highest point, this was my lowest point, and then this was where that point came from. And if you notice, I'm using the wicks on the low time frame, and overall I've been using the wicks more and more because of the wicks being information, and because of us being on the me being on the 1 minute time frame. These wicks right here are made up of 1 minute candles, so I mark it out so I can see what my highest point was on the 1 minute chart, right? So we'll mark it up, and I'll show you what I mean in just a minute, right? So I had that indication level, I had this highest point, and I had my lowest point was down here, right? So I probably marked something out like this, and then we can adjust this level once we get down to the 1 minute time frame. So now let's change this to a different color. Okay, so the pink boxes are going to be our 5 minute structure, right? We still care about the 1 hour structure. We only care about the 5 minute structure because it's at a 1 hour level. I wouldn't care about my 5 minute structure if it was just randomly right here or once it's right here. I only care because it's in this area. It's in my blue zone, my 1 hour zone. I know that I had that marked up for a reason. Why? Oh, because this is where this big drop came from. I'm looking to repeat this again. I don't care about it being right here. I don't care about it being in the middle. I care about it once it's at one of these blue zones. Then I start to mark up my 5 minute, right? That's the only reason why I was able to mark up my 5 minute time frame, because of it being at a critical level, because of it being at a key level, right? So now let's wait to see what price is going to do. Actually, no. From here, I was able to mark up my chart, and then I zoomed in on the 1 minute. So all those wicks that I had seen before that I didn't like, I was now able to see how they were being built on the 1 minute structure, right? And so I see, okay, it was kind of just chopping around. It was going up, but it was going sideways as it was going up. So that means a lot of fake outs. That means a lot of, not sure. It's not really wanting to go up because it's going sideways as it goes up. If it really wanted to go up, it'd shoot up. And if it really wanted to go down, it'd shoot down, just like how it did right here. So I don't feel confident in taking any buys. I don't see any structure that I would want to trade anyway. And so this is how you avoid even chop on the 1 minute time frame, right? So you have chop right there, like it's just ugly. You know, you want to be in a trade, and as a scalper, you have a lot more opportunities, but you're also prone to a lot more fake outs if you're not careful enough to watch out for chop and to watch out for just not knowing what your higher time frame is doing. So this is chopping up because it wants to go down. It doesn't want to go up. It just wants to go up to reach that 1 hour indication level, and then it wants to go back down. So right here, this is what I saw. I saw that this was our highest point, and price broke out of it and gave us this highest point now. So what was I waiting for if I was going to see if I can scalp some buys? I was waiting for a break above this level again, right? I missed this trade right here. So this is where you can trade support and then resistance and this and that. And yes, I could have scalped this trade right here and let me show you exactly what I'm seeing in my brain. I could have traded something like this, and then stop loss below there, and then targeted this high. And yeah, my target would have been hit, but look at how unsure price was as it was making its way up. It would have been up, and then you would have been right back down. And it's breaking structure as it goes up. So you would have been freaking out, being like, damn, I probably could have moved my stop loss here. And then it just fakes you out. And then you're like, what the hell? And then it goes back up, and you're like, what the hell? And then it goes down, and you're like, what the? And so it's like, if you're gonna scalp the way up and it's a bearish trend, just know that it's going to be low probability and you're going to be sweating on your hands, because even though you're still able to do it, you're going against the higher time frame trend and it's going to be choppier. But if you were to wait like I did and wait for all of the time frames to align, right? So the 4 hour gave you an indication that it wants to go down. We saw it on the 1 hour. We zoomed in on the 15-minute. We saw that it's going up. We know that that's a correction. Now we're waiting for the correction to be over, and we're going to see that as it starts to be built right here. We saw that the 15-minute correction failed to make a new high. We're zooming in on the 1 minute to see how that structure is building lower lows and lower highs, so that we can catch the continuation starting from the 1 minute, because the 15-minute gave us clues, right? So now I saw that price failed to break this high, and it was, see, it's like 9:30 almost. And so let's see if I remember where I took my trade from. Yeah, okay, right here. I was waiting for this to break. Why? Because I knew that price, once it broke right here, it gave this level right here. So it gave us that level that we could aim for if we're selling. But obviously this is the level, the 5-minute level that I'm aiming for, because overall I was waiting for that correction on the 15-minute time frame and the 1 hour and the 4 hour. So this was my 5-minute low. But once my continuation started on the 15, it was likely to show on my 1 hour. So I was able to zoom out and target my 1 hour low. So yes, I had a 5-minute low that I aimed for, another 5-minute low that I aimed for, and then my overall target of my 1 hour low that I was aiming for, because I was able to dissect the 15-minute time frame on the 1 minute time frame. These levels right here, they're inside my blue zones, right? So this is where I could either, 1, add positions, or 2, remove my position and take some profits, right? So let's say I entered with 3 contracts right here. If I got to TP1, I'm going to sell 1 contract, get some money. TP2, sell my second contract, get some money. I only have 1 contract left, that's leaving a runner. It goes down to my TP3 and I'm out the trade. And I have 3 targets that were hit on my way down to my original target, right? Or if I wanted to start with 1 target here, 1 contract I enter, then I see it hits my target and it continues to build bearish structure, I feel comfortable taking another contract. So now I have 2 contracts. So now I reach this level and I see that price respects and continues to build bearish structure. So I add another contract. Now I have 3 contracts. Now I'm targeting this low. So now I'm able to go all the way down to here. TP was hit and I added to my position because I had levels between these 1 hour zones that I was able to target to either add or remove from my position. And then this is my overall target. So that's how you're able to add to your position, remove from your position. Removing just means you're taking money as you see it and you're making less money as the trade continues, but you have secured some because you sold some or you bought some if you're buying whatever. But you're just securing money, you're taking it out of the trade and you're putting it in your account so that price can continue to go lower with the contracts that are still in the trade. Okay, so I was waiting for a break of structure here because this was my indication. And then let's see when this happened. I think it happened right here. And so I saw, remember, I'm on the 5 minute, I'm still waiting for a break so that I can zoom into the 1 minute. So what happened right here was a break. So now my 1 minute, oh wait, I'm on the 1 minute. Yeah, so I was right here. I wasn't comfortable taking this position at first because I didn't really close below my zone. And right afterwards, we had these big bullish candles, and I didn't like that. Especially if I go back to my 5 minute, I see that it's just still an indication. So if I could just, I even had this marked up right here to see, okay, I broke down from this minor break of structure. This is major break of structure because these are major levels. And then I had a minor break of structure on the 5 minute, which just means that my most recent low was broken. Minor just means most recent. So this was broken. I can still see that overall I'm still on a 5 minute indication. And so I was waiting for a small sort of pullback right here because now we can see this is the indication that I'm talking about too. Or no, yeah, this was a 5 minute wick right here that I didn't really count. I just was mostly targeting, or I was mostly focused in on this area right here. And I took notice that this, yes, there is an indication here that confirms sellers are below this little 1 minute level. So once we were below it again, I felt comfortable taking a sell because now I have everything aligning. And if I go down to my 15 minute too, I'm seeing, okay, it's starting to build a lower high, and I broke my most recent support on the 15 minute time frame. And let's make it green real quick, or let's make it black real quick so you can see my 15 minute support right here. And I'm just counting the bottom of this red candle, the most recent red candle that was broken, right? And so that means that this is not strong enough to support the buyers anymore. So even on the 15 minute, we're starting to finally break structure, and we're finally getting that lower high and lower low, right? That's what we wanted to see when the correction is going to be ending. So now let's go back to that 1 minute time frame because that's what we're focused on. And I was able to, I think I bought now right here. Oh, I can't. I'm not gonna replay. Does that do anything? I think I only sold like 2 contracts. I went in small with this. I don't know why I went in small with this. This is just a learning curve. This is why I'm also making this video because I have been struggling with the 5 minute and the 1 minute, and I feel like this trade really cleared everything up for me personally. And so I went in small with this so that I can know in the future if I see the setup again, I'm going all in. And so I went in with 2 micros, and then my stop loss was right above this high right here. So it was about $100 and something. I was able to make $1,100 off of this position. I put my screenshot up, but I was adding and selling to my position. So I got down to this level and I sold, and then I bought again. So I secured profits and then added again to my position. And that's how I was able to make it up to 1100 in my position. So I sold from right here. I put my stop loss right there. So let me show it with the tool. I had my stop loss right there. And then I had an alert, actually. I had an alert up here to say, hey, price potentially can reach up to these levels. So I did have, I think, my stop loss, my true hard stop loss above there, because I knew immediately get me out because I'm going off of that higher time frame. But overall, I know that if price is going to respect a structure, it's going to respect it regardless of the time frame that it's on. So I put a small stop loss right there, but I also put a stop loss right here in case it just really wanted to show me on the 15 minute that, hey, you're wrong and I actually do want to continue up. So that's why my stop loss was above that 15 minute high to tell me that if it takes my stop, then I was wrong. The correction is continuing, and I can potentially hop in into a buy. So anytime your stop loss is hit, it should only be hit if price is reversing. There's no reason price should take your stop loss and then hit your target. That means your stop loss is too small. That means you're not giving it enough structure, or you're not giving it enough room to breathe. If I were to keep my stop loss right here at the 5 minute, at this 1 minute, I don't have enough room to play in this area, because I know that this 5 minute is one of my key levels telling me, hey, price above here is going to continue to buy. So unless we're breaking these highs that kept rejecting, I feel comfortable with price playing in this area and making a higher high and then coming back to make that lower low, because it could potentially still be just a correction from breaking this level. It could be indication, then correcting in this level, and then continuation again. And if I put my stop loss here, it might wick me out and then go right back to my level. So I don't want that. So I put an alert right here, and I put my stop loss right here, and I put an alert right here just to see, okay, is price actually gonna come and hit my stop loss? Because if it continues to build structure before it even hits this and breaks, I'll most likely get myself out and save myself some money if the bullish structure is undeniable. But if it's like over here and then it starts to build lower lows, then I feel comfortable holding and seeing, okay, well, I was just way too early for this trade and I got to deal with my drawdown, and now I can go and continue with my bullish structure. But this is how my target looked, because price, we'll see what it did. Yeah. Okay, so I went down here and then price started to go into my direction. And then you see how price went back to this indication level on the 5 minute break. So indication. So I guess I even was early to the trade. Who knows? There was a second opportunity to get into the trade if you missed the first time around off of this indication. So you could have gone in on the minor break or the major break. And we can see that I got in on the minor break of structure. And then price broke the major 5 minute level, came back, retested it, gave somebody else an opportunity. Then I was able to make my stop loss smaller. And then, yep, it just continued to go down. And then still just respecting my structure. And price went right there to my TP. I had an alert here, so that's why my stop loss was smaller, because I had this high that I know that if I broke, I added an alert there. If I break it, then I have the potential to go up. But it rang a few times, but it never closed above. It never gave me any sort of continuation. Instead, it just continued to get lower and lower. And so I was able to feel confident, like, okay, it's just probably just on the 5 minute time frame building that lower high. And right here, we can see that it's just building lower lows and lower highs. And right here, it shows that that was an indication right here on that 5 minute time frame. So let me zoom that out. That 5 minute time frame, we got that indication. This ringing of my alert so many times was price correcting, and then it was showing me that right here we had a break of structure again on that 5 minute time frame. And so I felt confident again, just holding my trade and writing it all the way down to the 1 hour level that I had marked up, right? So there's one TP hit, and then that's my other TP. Oh, dang, I had that wrong. So I'm not gonna be super picky about it. I'm just gonna, in general, this is somewhere where I was, right? And then it kept just going down, right? So this was my TP1, TP2, and then TP3. And then this was my trade. And then it kept going and going and going. So all of that was indication. Then it was correction. And then making sure. And then we got that break of structure. That's that 5 minute break. And then we got that indication on the 5 minute. So as we're on the 1 minute, we can see what the 5 minute is doing. So now we can see that price is continuing and eventually hits my target, right? So that was my trade, right? I was able to buy right here, secured some profits, sold again, and I wish I would have had this plane right now. But yeah, this was how I was able to make that trade work out. And then I had right here, my TP was hit, and then right here, my TP was hit. And if we zoom into the 15-minute time frame, that's what I was just doing. I was just monitoring it on the 5 minute as it was going down, and I was seeing, okay, it's still respecting the structure, it's still respecting these lower lows, and it even went down to my 5 minute right here and broke right through it, making lower highs right here that were never broken, and it continued to break actually this low right here. So that was more confirmation to me. As I was in my 1 minute trade, I was just looking at the 5 minute, seeing the 5 minute is being created by the 1 minute, and how the 5 minute is creating the 15 minute. And I was like, oh, so all of this is just going down. Perfect. I feel comfortable. I was able to get from this, the continuation from the top of the 1 hour down to the bottom of the 1 hour. And then this is when I had my runner, and that's how I was able to get more than I had in mind. And so if I would have kept this runner going, I think I closed out somewhere around here. And then I went to bed because, like, if you see, it's like 12:50. I don't know. It was like late for me. I was so tired, and I wake up at 6 a.m. for Asia session. So that was already way past my bedtime. It was almost 1 a.m. And so I didn't want to hold anything overnight, and even though I should have, but I just am still getting comfortable with the 1 minute and with the 5 minute and all of that and catching continuations. But yeah, that is how I was able to get in on the 1 minute time frame using all of my high time frames, right? So even if I go back to my 4 hour, I don't know why I did not hold this trade, because every continuation just means new indication. And yes, I could have held my trade for a lot longer, but I still had nowhere to aim for unless I was holding this long term. I did get a really good entry right here if I was going to hold this long term, but I just didn't. I didn't have that in mind. So this is why I'm making this video, to show myself how I could have literally, I sniped an entry right there, and then I could have rode this all the way down and continued to hold this trade for long term. And if I really wanted to, a tip, if you are in indication and you don't know where it's going to go, always, what did I say? Look left. So I would have zoomed out on my 4 hour time frame, and again I would have found this would have been my target because I'm looking left and this is my lowest point, and my target would have been hit. And so that's how I could have held. Look how much money I missed out on just by not holding. So see, I missed out on 4K. I made 1K. I missed out on, this trade would have gotten me 5K just with two micro contracts. By the way, this is more realistic for all of us out there and all those people making hundreds of thousands. This was two micro gold contracts that if you would have held from the top to the way bottom of this 4 hour level, then you could have made $5,000, over $5,000. That is how I have been continuously doing my 5 minute, 1 minute scalping. I've been trying to get more continuations rather than scalping the indication and correction, because those are low probability. I want high probability trades, and the continuation is what's going to give me a high probability trade. And we proved it right now. I found where the indication came from. When the correction ended, I was able to get in at the end of the correction. I targeted my low, but I should have kept it going, because overall, the trend is your friend. And if you make a lower high, which we did, you're gonna make a lower low, which we did. So that is how I could have held this trade for just so much more longer. and it would have been such a beautiful, beautiful trade. But yeah, I'm gonna be making more videos focusing on the 1 minute time frame because personally, I am trying to be an expert on the 1 minute time frame because I'm trying to scalp more and more just to build my capital like we saw right now. I made $1,000 in that night on my eval, which I need $3,000 for, but if I would have held, I would have made $5,000 and passed that whole fucking eval. I will post more recaps of the more trades that I take, but this was overall just my 1 minute ICC scalp on gold that was able to make me over $1,000 for my Lucid trading eval. Anyway, see ya. Bye.